Offchain Labs just announced that 10% of the fees that get generated on the new Robinhood chain will go straight to Arbitrum. And so, of course, the ARB token is going up. But are actually Arbitrum token holders directly benefiting from that? Here's a comment on Twitter. 10% of fees collected on Robinhood chain go to the Arbitrum ecosystem. Is that a reason to buy Arbitrum now? This is Arbitrum measured in US dollars. Here is Arbitrum measured versus Bitcoin. A very constant underperformance. It is very scary to buy an asset like this just because of one piece of news. Yes, it's true, infrastructure is hated at the moment. But is Arbitrum really a potentially interesting example? Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and I did this mainly through active trading of altcoins. In the last 2 years, I started to publish my trades in real time. We made 48% per annum. We are currently at an all-time high with the current open positions. And we have just closed our short on Ethereum, by the way. So all of the closed positions, they are over here as well. That short made us 38%. Every single trade is published over here. Now those are all the closed trades. The open trades, they are of course available to the premium members of this channel. Now Arbitrum is a layer 2 scaling solution on top of Ethereum. Unfortunately, it did not perform well. Now we started to short Arbitrum on the 8th of July. So that's when I started to bet on falling prices. This is an announcement in premium. Since then, Arbitrum went down by 84%. Now that short is on and off, but I still like the position. I still like to bet on falling prices. This is up relative to the rest of the altcoin market. This is the recent rally. So for this chart, we are dividing the current Arbitrum price by others. Others is the market cap of all the altcoins that are not in the top 10. So Arbitrum continues to be, even with the recent rally, within its long-term bearish trend. Now where does this bearish trend come from? For example, we've got very low chain revenues. There was a time where we had more than $100,000 worth of chain revenues per day. Now we are close to rather 10 to 20,000 per day. Here is the decentralized exchange trading volume. So how much trading happens on Arbitrum directly? That peaked at the beginning of 2025 at around 1.5 to 2 billion per day. Now we are at a bit over 100 million per day, a decline of 95%. Here's the number of active addresses. That used to be close to 1 million. And now it's close to 100,000. So again, a 90% drop. So an underperformance of Arbitrum relative to the rest of the altcoin market seems to be not that unreasonable. But it's not just that. There are other factors at play as well. By the way, if you use X, formerly known as Twitter, then feel free to also follow this channel's account. I publish data regularly over here. Make sure though that you follow the right account. So that's @BitcoinStrat. Make sure that you don't follow a fake account, an impersonator account. This is the only real account @BitcoinStrat. Now here's the second problem. We have very little adoption of Arbitrum. It tends to go down, but at the same time, we see how the supply grows over time. A growing supply is not great because the project has to grow at least at the same rate to make up for all of that supply expansion. And it really matters, right? This is the long-term price chart. Compare that to the long-term market cap chart. From this point over here to this point over here, the market cap fell by roughly 50%. It's not that great, but it's not the worst in the world. The price from that point to that point fell by 90%. Right? A 90% drop in price versus only a 50% drop in market cap. That's all just because of token inflation. It's the investors, it's the team that get new tokens allocated all the time, and they dump on the average retail investor. They're pulling out capital from the system. Here's the inflation going forward. So in numbers, that means an increase in supply by roughly 18.7% over the next 12 months. Now that supply expansion will slow down. Still, it's way higher compared to, for example, what Bitcoin has, right? With 0.8% per annum. Do we really expect Arbitrum to grow by 19% almost when the number of active addresses is shrinking like that? Here's the total value locked, the capital that's on chain for Arbitrum. This does not look like a growing trend, rather the opposite. The ARB token is the only token among all of the layer 2s that does not directly benefit from the usage of the chain. There's no buybacks, there's no burning mechanism. Instead, those 10% chain fees, they don't go to the average retail investor, they go to the Dow Treasury and to the development fund. So again, more money for the insiders, more money for the team, less money for the buyers of ARB. Now let's have a look at the short-term trading, because there's two effects for the price. There is the spot buying, people buy and sell the token, but there's also the speculative money, people that bet on the price via perpetual futures, via leverage. In the last 24 hours, we had 22 million worth of trading volume on Binance on the spot market. On the perpetual futures market, we had almost 150 million worth of trading volume. So much more trading volume on the levered bets. Most people that are betting on Arbitrum, they are betting on rising prices. There's more longs than shorts, thus the funding fee tends to be positive most of the time. Here is the open interest. So this measures how many bets are currently placed on Arbitrum. It's a measure of how much inherent leverage there is in the asset. And there is correlation here, right? When there's less bets, the price tends to go down. When there's more bets, the price tends to go up. So the more leverage we have in an asset, the higher the price tends to be. This matters because if leverage goes down, the price will come down with it. Currently, leverage is not very high for Arbitrum. This is actually a potentially positive sign. But again, those are just short-term movements. This is fleeting capital. It enters and exits. That's why people use perpetual futures. It's not capital that's allocated towards the asset long term. If you want to buy an asset long term, you don't pay the financing fees. Instead, you just buy the asset on the spot market and you don't care about the short-term transaction fees. Here is the trading volume on the perpetual futures over time. Again, this tends to also correlate with the price. If there's more attention, more trading volume, then the price goes up. When attention moves to the next asset, the price goes down. And of course, with this recent rally, we have seen a few short liquidations because this chart, it of course invites to bet on falling prices as well. And so that then begs the question, does it really make sense to buy Arbitrum because of Robinhood chain, when all of those fees go to the insiders, to the treasury and to the development fund? I am not so sure. That being said, I'm not saying that Arbitrum has to turn around directly from here. It could potentially still outperform by another 50% versus the rest of the altcoin market. Arbitrum has seen its short squeezes in the past. It could see another continuation of the short squeeze. That will be just in line with the general development of the token. For the very long term though, I don't think that anything has changed here. The token inflation is still very high and Robinhood chain will not start to buy up tokens, and even more usage of Arbitrum will not lead to a price appreciation of ARB. Now, as usual, I have run my back tests, my simulations of buying and selling the asset. This time it's for Arbitrum. We try to figure out what's the best moving average combination. So we're looking for the best combination for golden crosses and death crosses. That's what we see in this heat map. So a slow moving average versus a fast moving average. What trading strategy worked the best? And over here, we've got the best one. That is, to be more specific, the 20-day plus 45-day simple moving average. So over time, that's then how that looks like on a chart. We've got Arbitrum with those two moving averages. And at the bottom, we've got our US dollar portfolio development. And at the very bottom, we've got our value of the portfolio measured in ARB. So this is a very long-term outperforming strategy. But how much does it outperform? Here are the numbers. If you bought and held Arbitrum, you would have gotten wrecked every year. You would have lost more than half of your capital. But if you followed this strategy, you would have more than doubled your capital every single year. So the 20 plus 45-day simple moving average worked very, very well in the past. And this is where we are right now. Unfortunately, the 20-day SMA is still below the 45-day simple moving average. We have not seen a golden cross yet. Instead, we saw the death cross on the 25th of May. So all the numbers, they still point towards a continuation of the bearish trend. That's when we look at the data, at the backtest, at the best trading rule, that again historically performed extremely well. Now, just because this trading rule worked very well in the past doesn't mean that it has to work just as well in the future, but I rather take this as a potential signal than just a random guessing. And if that backtest tells us that the momentum has not yet turned around, and if the long-term chart versus the rest of the altcoin market still looks very scary, and I'm not sure if it really makes sense to buy Arbitrum. I'm personally very bearish. Now, this trading strategy of optimized moving averages, that's what I use in order to generate this long-term outperformance. So again, if you just have a look at the trading history, we just search for death crosses and for golden crosses. And we do this ideally for assets that have had quite a bit of a run. For example, over here, we shorted Terra Luna Classic with the dev cross, and then subsequently we closed the position once we got the golden cross. So all of those positions, they can be 100% tracked back. It's completely transparent. I don't think that anybody is doing that. Now, I cannot share the current open positions, right? That's for premium. However, there is now this website pinned down below. So there is one free premium trade that I give away here on YouTube as well. You can get that free premium trade either via Telegram. So you just click over here if your Telegram is connected to the device where you access the page. Alternatively, you can also scan this QR. Or if you don't use Telegram, you can also just enter your email and then you get that trade sent to your email. Besides the trade, you will also get a free premium tutorial video that explains how to set up the trade, what to exactly do, how to manage the risk, etc. There is no payment needed. There's no credit card needed. It's 100% free. Feel free to check it out. It's pinned down below. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.